Hello guys, welcome back to ESENtaxa. Andrea Vito here, and in this video I want to talk about a very controversial topic between husband and wives. You're telling me, but this is ESENtaxa, you talk about taxes, what about this kind of topics? Why you're switching to completely different topics? Actually, the tax regime that you're using when you get married and you're choosing when you get married, it changed significantly your tax situation and can actually basically allows you to understand if you are tax free, you are free in terms of dealing with your own taxes, or you're going to have issues with the tax authorities if you're making the wrong decision along with your wife. Okay, so if you're new to this channel, ESENtaxa talks about how to optimize your taxation in a specific country, and here we also, in this channel, we tax simulate your situation. We help you to understand if that specific country makes sense for you or not in terms of taxes. And we also have recently opened academy in which we explain you in very easy manner all the international taxation system in the world, how it works, and then once you have learned this basic concept, you can more easily grasp the meaning of certain kind of discussion with your tax advisor in light of a future or next very soon relocation to a specific jurisdiction. Here in this channel we always talk about tax regimes. We try to keep you up to date on certain jurisdiction. We started with Italy. We're #1 channel in Italy for an English language that explain everything about very in details all the tax regimes, how you can optimize your taxes if you want to move there. But also we cover Belgium, Republic of San Marino, Albania, Portugal. We're also covering now Spain, and we are adding more and more jurisdictions. You have to just subscribe the channel, you will get know which of those jurisdictions we are covering all around Europe. Okay, we are also suggest an tax plan for people who wants to quit Europe and looking for a jurisdiction outside Europe. Okay, so this also is a service that we are recently adding among our portfolio of services, and also for certain jurisdictions such as Belgium and Italy, we're planning, actually we already implemented the relocation service, so in case you need also the visa along with your tax regime, we can help you with that. In the description below the video you have all the information you need, our website www.esentaxa.com, our calendar link if you want to book a consultation with us, or you can write us any email at info@esentaxa.com. Now, going back to the topic of this video, I said at the beginning that it's a very controversial between husband and wives. This is because it's the classical situation where you get married and you have to decide which tax regime you want to use along with your partner. Okay, can be I mean, the husband and wife, any kind of partners. I mean, I'm not going to just looking at the classical family structure. So in most of the countries in Europe, we are going to have a tax regime which is applicable by default in certain countries, which is called joint assets tax regime between partners that want to get married, or they want to be legally bound in a sort of similar marriage status, or in some other country you can choose between the tax regime or separated assets versus joint assets. Okay, so what does it mean? Let's take the example of Italy. Italy works like this: you can go to the commune, you can apply for the marriage, you want to get married, and the local authority, the guy in front of you, will ask you which is the tax regime you want to apply with your partner. You want to be in a separated assets, or you want to be in joint assets. Now, this is a very important decision, you know, because if you apply for joint assets, everything you're going to purchase along with your partner, or even if you purchase something alone without your partner, automatically will be splitted with your partner. So let's imagine I applied for the joint assets regime. I purchase a property, I purchase a car, automatically by default will be joined with my partner. So 50% of the assets, it's mine, and the other 50% belongs to my partner. Automatically. by default. While if I'm applying the separated wealth or separated assets tax regime, every time that I'm purchasing something, I have the right, and basically I can choose if this new asset that I'm going to purchase will be bound, joined or not with my partner. So that's the difference, okay? And actually, for most of our clients that are moving to a specific country in Europe and they're coming with a specific marriage regime, it's gonna be a problem, because when they transcript they tax certificate, they marriage certificate in the country in which they are relocating to, this regime, if it matches with the local authority, will be transcripted and applies also, it will be applied also in the new country of destination. So what it means that everything that you have purchased or everything that your partner purchased, okay, without telling you, because this could happen, maybe he's in a good faith, he wants to open a bank account abroad, or he wants to purchase a car in another country, everything automatically will be joined with you, okay? So, and sometimes your partner is not thinking about taxation or this kind of things or declaration at the end of the year, but at the end of the year you have to disclose all your assets that you have worldwide, and also those belongs to you because of your partner decision that you didn't even know. Okay, so that's the reason why you have to be very careful to choose at the beginning of your relation with your partner which is the tax regime, separated or joint assets, because it determines in the future, at a certain point in the future, I will be bound automatically. So it means that every tax year I have to make sure in my tax file return in Europe that I have to also declare the 50% part that my partner purchased, purchasing, which is bound to my name also. You know, if I made myself clear. Let me give you another example. As this happens especially when you have assets in different countries. So I'm living in a country with my partner. I decided to deal with my marriage with joint assets. Okay, some years are passed, and your partner, without telling you, is opening a bank account. Let's make it simple. Then the following year you have to transmit a tax file return in the country you're living together. And the country you're living together, it's a worldwide taxation system country, so they demand you to declare everything you have abroad. But you also have abroad 50% of a bank account that your partner opened and you didn't even know it. And your partner even maybe your partner thinks to declare it and he forgot or she forgot to tell you. And then the foreign country, with the automatic exchange of information and sending to this phone, is this 50% joint account to your tax file return that was not declared, and then sanctions are coming, fines are coming. You see, there is a mismatch of what they have abroad, the other tax authorities have abroad, with you. This is a very complicated things that could happen, and unfortunately when you're moving in different countries, across jurisdiction, and having multiple properties or bank accounts or assets abroad with joint tax regime, joint assets tax regime as a married couple, is going to be more difficult to keep track about everything. It's not about like losing taxes or avoiding taxes. It's just basically, it's mostly about forgetting to declare to the tax authority that 50% of that specific assets belongs to someone else also. You see, that's the point, okay? This is one of the big problem when you choose joint assets automatically. You can choose joint assets tax regime automatically when you get married, but you have to both be aware of the consequences of this tax regime, okay? So if you're both aware about it, no problem, you can move forward. But if you're not aware of, or one of the two partners are not aware about this tax regime, you absolutely have to opt for the separated joint tax regime, which basically allows you in the future to be more independent when you want to purchase, make an investment, or even have FTF or cryptocurrencies. Everything then is not automatically owned 50% by default also by the other partners. Not because you don't want to share your wealth, it's just because you will forget for sure to declare and report all these assets in the tax file return in the country you just moved to. Okay? Or you move to a country, you want to get married there. And this is mostly in Europe. It's a very common situation, it's a very common law that it's basically, it's very similar among the European Union countries. And there's also another point, this is a second very important point. If you get married legally with your partner, you become one single family. So the ties, relations are always bound to another person. So whenever you want to move to a different country, you want to change your tax residency, also your partner has to come with you. Okay, so you have to keep in mind about these things. So you have to keep in mind, if you want to tax plan a certain kind of tax optimization, also your partner, married partner, must be followed exactly your same path. You cannot living and be tax or pretend to be tax resident in a specific country, then your partner is living in another country. So you want to get married, but at the same time you don't want to pay taxes in the country in which your partner is living. So be careful, this is not possible. Once you get married, you become one single family, one single block, and all the family is tax resident in the same country. You cannot be tax resident in different countries. Even more if you have child with you. Okay, I hope I clarified this point. We're getting more and more clients with this issue. So I hope this video basically gave you some clarity on this very controversial, let's say, situation. And for anything else, just subscribe to the channel, notification bell, and like button to be always updated whenever we release this kind of video. See you to the next time. Bye.